Before we get started, here's something worth marking on your calendar. On Saturday, 11th July at 10 a.m., we're hosting 2 exclusive live webinars. Why 1 crore is just the starting point for your goal explores whether 1 crore is really enough to achieve your financial goals. How we are positioning portfolios for the next 6 months shares our latest market outlook and portfolio positioning for the months ahead. Register using the links. We look forward to having you join us.
The US Boring Stocks Index is an experiment that I am doing in the US markets, but more than just an experiment, I am also investing my money in the US market in these stocks. I've been doing this for quite a few years. I just turned it into something more public and open so that whatever I learn as an investor is also shared with all of you real time. So I've created an equal weight index of 10 stocks. These 10 stocks are Crocs, Uber, Amazon, Alphabet, Apple, Pepsi, Kava, Meta, Netflix and Costco. A bit of the Mag 7 and consumption. So it's almost equal distribution of some consumption franchises and the Mag 7. That's this portfolio in simple terms. I've not really gone anywhere near the semiconductor trade or the AI trade. And it's a conscious thing. I generally don't chase momentum. I like buying value and hoping that what I buy as value gives growth. So that's broadly the positioning of this portfolio. Most of these FANG stocks were also bought at very early stages or at lower levels. To give you an example, my Alphabet purchases were when the stock was in the hundreds, maybe 120 to 130 levels. The idea behind this equal weight index is to build a portfolio of businesses that do very well over long periods of time. The intention is not to trade in the US markets. As an Indian investing in the US, trading is not tax friendly. So I want to only buy and hold. And this portfolio is completely aligned to the buy and hold philosophy. Thanks to the AI and semiconductor trade that happened this year, this year's performance has been rather underwhelming for this portfolio, but the performance for June has been somewhat of a consolation or maybe a little revival. In the month of June, the Nasdaq index lost 2.36%. If you invested $1,000, it became $976. During the same period, the MSCI World Index lost 1.6%, $1,000 became $984. But during the same period, the US Boring Index, which I have created, lost 1.32%. So $1,000 became $987. The best performing stock in this US Boring Index during the month of June was Alphabet. It made 15.44% returns. Crocs was barely up at 1.14%. Apple was up 3.29%. Kava was up 5.1%. Other than that, all the other stocks were in the negative. Uber was down 2.18%. Amazon was down 8.77%. Pepsi was down 3.29%. Meta was down 6.1%. Netflix was down 16.83%. And lastly, Costco was down 1.12%. So the best performing company in the Boring Stocks Index, which I curated during the month of June, was Alphabet, and the worst performing one was Netflix. But as we start looking at the performance during the year, from January, you have a very different picture. The Nasdaq index from January to June returned 14.75%. $1,000 became $1,147.5. The MSCI made 9% returns, $1,000 became $1,090. But the US boring stocks index, which I curated, made only 5% returns during this period. $1,000 became $1,051. But when you take the period since inception, there again, this year's superior move in the Nasdaq index has made Nasdaq a far superior performer. Between 31st August 2023, when we started this index, to 30th June 2026, the Nasdaq 100 has delivered 96.04% returns. The MSCI World Index has delivered 62.78% returns, but the US Boring Index has delivered 71.68% returns. So there's a clean 25% outperformance by the Nasdaq 100 over the portfolio that I curated over this period. There was a period when we were beating the Nasdaq clean. That was prior to 2026. 2026 has changed all that, and it's largely due to the semiconductor boom, in which we don't have much exposure. In fact, we have literally very little exposure to those stocks which really boom, like Nvidia and such companies. Before we close, let's look at the portfolio's performance from January 1 to June to see which are the stocks that performed well and which are the stocks that are dragging this US boring portfolio. Crocs and Kava are two stocks which are stellar performers in this calendar year so far. Kava is the best performing stock with a 50.46% return in this 6-month period. It's up by 50%. Crocs is up by 48.64%. It's a very close second. You also have Alphabet up 24.58% this year. These three stocks are the stellar performers, but we have some stocks which are done very badly, like Uber minus 27.64. Then you have Netflix minus 35.1. And then you have Amazon minus 6.17, Pepsi minus 2.7%, and Meta minus 11.42. Costco has been a very marginal performer, generating just 2.2% this year. So broadly, this portfolio's performance has been dragged down by Netflix and Uber significantly. Meta is also a big contributor, and just Crocs and Kava have been stellar performers. The wild swings in performance, one stock goes up nearly 50%, two stocks in fact, but you have two stocks which have lost more than 25% and one stock more than 35%. So when you have such negative performance in a portfolio, the overall portfolio simply gets bogged down, and that's essentially what has happened in the US Boring Index. Am I worried? Certainly not. I think that I'd rather buy good franchises which I can own for years together. My objective is not to create taxable income by investing in US. I want compounding to play a part for years together, and I want my portfolio, which today has risen significantly by my investing $200,000 to $250,000 every year in the US markets, to a very sizable portfolio. I want this to become a big portfolio which I would just buy and hold. So the buy and hold strategy is what I am doing. I am buying value, hoping it will translate into growth, and I am sure each of you have your own investment philosophy by which you can invest in the US markets and profit from it. Importantly, I want you to share your thoughts on investing in the US markets. Which are the companies that you have invested, which you liked and have done well for you? Which are the ones that haven't done well? Which are the companies that you wanted to invest but somehow missed out investing in? Your thoughts can flow freely in the comment section, and we'll keep engaging on this US Boring Index in the days to come. Thank you for watching this video.